Welcome to the Buy-to-Let Show, the only programme which gives you all the information you need to know whether you are thinking about buy-to-let for the first time or are an existing investor and landlord. Now, buy-to-let has become one of the most talked about investments in the media, online, at dinner parties, and there are even monthly property investor events you can go to in your local area. For some, buy-to-let has been a great success. They've been able to give up their day job and earn millions. However, for others, it's been a disaster, and sadly, some have even lost their home. So why is it some people have done so well out of buy-to-let and others haven't managed to make any money at all? And with increases in buy-to-let taxation and landlords' costs rising to meet ever higher property health and safety standards, can you still make money out of buy-to-let? And if so, how? Now, I've created this series with the support of Direct Line and some of the top finance, legal, health and safety experts in the country, as well as successful property investors and landlords. If you're already investing or renting out your home or thinking about buy-to-let, this programme will make sure you are equipped with all the resources you need. So, first things first, what are the main reasons why some people are successful at buy-to-let and some fail? Let's first look at the top 5 reasons for buy-to-let and landlord success. The first one is really understanding what your financial objectives for investing in property are in the first place. For example, is it income that you're after, or is it capital growth that you need? And if you're looking at that, how much income and how much capital growth do you need by when? The second thing is making sure you have spoken to an independent financial advisor before you actually invest in properties. Now, many of you will be investing in property because you don't want financial investment advice, but these people are absolutely key to understanding your gap in income, your gap in the capital growth and asset that you have, and indeed understanding how adding property to your wealth will affect your tax circumstances. Third thing, securing the right experts to help you finance and ensure your buy-to-let property is essential. And next, knowing the 160 plus laws and over 400 rules and regulations you have to know to let a property legally and safely to tenants is an absolute must. If you do not know these rules and regulations, you can be heavily fined. Finally, having a plan to exit your property and make sure that you mitigate the tax from the start is essential. Now let's have a look at the top 5 reasons for buy-to-let and landlord failure. Firstly, and this is a real big one, just seeing a property, buying it, and then hoping it will let out for the amount you want. That's absolutely not the way to do it. If you try and purchase a property and you add all of this extra wealth to your current income without any independent expert advice, you can get yourself into all sorts of problems from a tax perspective. Next, not financing or covering your property against the risks of buy-to-let with the right mortgage or the right insurance can lead to all sorts of problems. Next, looking at letting a property yourself without any legal and health and safety knowledge is an absolute no-no. For example, you may end up in all sorts of problems, getting fined tens of thousands of pounds for not letting to a tenant safely and legally. Next one is huge, not having a maintenance schedule. When you invest in property, you're going to invest for 15, 20, if not 25 years. That means paying out for a new boiler, £3,000, a new windows, £5,000, £10,000, even a new roof. So you must have a maintenance schedule in place, or maintenance shocks can cause you to end up with no money at the end of each year. And finally, trying to do everything yourself and not appreciating and understanding the commitment in time and knowledge that you need. Now, hopefully you have a better idea of steps you need to take to make a success of buy-to-let. But to help explain this more, next up is Tom Entwistle from Landlord Zone, one of the UK's top landlord experts. And he's going to explain how he runs his buy-to-let very much as a business. Tom Entwistle has more than 30 years' experience letting and managing commercial and residential properties. It was a family business, and his first memories are of collecting rent as a child with his mother. But he became a landlord by accident after buying a building for his wife to run a hairdresser's business. When she became pregnant, they decided to let it out instead.
The shop had a big basement which was totally full of all sorts of rubbish. It had been used as a dairy, so there was a big platform where vehicles could back up to. So I just, and there was a pillar in the middle and so on. So I just converted the whole thing, did it all up and let that as a workshop. And so that little unit turned into a good little earner. That was the first property I bought. And when I sold it, probably about 5 years ago now, the rent it was making then was as much as I paid for it 30 years before.
Residential lettings are an important area for any investor to understand. Tom's advice is to keep it local at first. It means he can be out in all weathers checking potential properties and keeping an eye on his investments. Understanding the local market is also vital.
If a landlord is looking at buying a residential property, these are the things that the way I would approach it. First of all, the market itself, making sure that within that location there is good tenant demand. A good way to do that is to speak to local agents. They're the people on the ground that know the market pretty well, and they will be more than happy to give you advice on that usually, especially if they might be involved in a sale or something like that. And as a landlord, if you're working in one area, you get to know the agents anyway, and you know they know you, and they know at some point they're going to make money from you, so they'll cooperate and give you the prices. So that's key, number one. Then the property itself, I would say, making sure the property you're buying is the right for the type of market you're going for, the type of tenants you're going to let. And then how many tenants can you get in that particular property? The more tenants you can get in a property, of course, the more money you make from that property. Whether you want to go into that sort of thing or whether you want just a single let. Single lets obviously are much easier to manage. It might be a single, a couple, professional or working people, or a family. I've always looked at properties to let to single or professionals, working or professional people. They're much easier to manage.
But how does buy-to-let rate as an investment? What kinds of returns can you expect, and how does it compare with other forms of investment? Sherrill George from Chase de Vere talked me through things to consider when investing £100,000.
Purchasing a buy-to-let is a lot more expensive than purchasing an investment. So you've got to think, on that 100,000, once you take out all the costs, that person's really only investing, say, 94,000.
Oh, there's a stamp duty.
You've got all the costs that you've got to consider for obtaining that asset. Then you look at investments. Actually, the majority of the funds, when you take out any initial costs, the majority of the funds are being invested. So really, the output from both styles of investment means you're getting very, very similar income streams from them.
And I suppose when you sell, I've also got the costs of estate agency, etc.
Exactly.
Whereas, do you have to pay to sell an investment?
See, that's the thing. There's this myth around there are penalties to sell investments. No, they're not. They're immediately accessible. Like when you're buying a property, we look at the exit strategy from them. So we would never consider someone buying an investment for a short period of time because you're looking for the long-term benefits of it. So because we look at that at the outset, we make sure that funds are able to stay invested. So when you do want to come out, there are no penalties. So we will not put anyone in investments. That means that there are penalties to come out, particularly if they've got an exit strategy of when it's due to come out.
So say for example, I came to you and I put all of my money into property. Why would that concern you? What would worry you about it?
Well, number one, when you're going into anything like property, you've got to think about the liquidity factor. So
What does that mean?
it means you can't sell a property overnight. So if you need liquid assets that you can spend, you can't get that. So if you put everything you've got into a property and that is all you've got, it lacks what we call diversification. So we try and make sure that we look at your whole goal. So we look at what you want to achieve over the long term, and we try and build a plan to make sure it encompasses all of that when we're building your financial plan. If it all goes into one area, it's a concern for us because it means you're reliant on just the property sector to perform. The way we structure your investment, we diversify, so we make sure that from your exit strategy perspective, investments, you can come out straight away, there's no penalties for doing that. And also, you've got to think about the income from it. With a buy-to-let property, it's only the property market. When we're looking at other types of investments, we look at things like pensions, we look at ISAs. These are far more tax efficient than a property. So because we're looking at that diversification, you've got far better opportunity to realise a gain, because we're making sure that regardless of what the performance of the market is, our focus is in you achieving your goal.
Okay, so it's not that you're, as I think some people think financial advisors are against property and you've all got to invest in finance. It's not that a lot of your clients, I guess, have property, but they also have other investments. And the key thing that you're telling us is that it's about helping people, providing a service to help people to get to their financial goals and make sure you look after them on the way. That's what we do.
Absolutely. Hit the nail on the head. Is a service. We actually provide a service. We do not sell products. So when we're looking at that service, a buy-to-let investment may be part of the service that we will say to our clients, actually, this is something you need to go into. So we look at buy-to-let as part of our portfolio strategy as well. So that's just one element of how we diversify clients' funds to make sure that they get the best outcome. So you're not reliant, like I said, on one market. So if the housing market is not performing, you know your investment could be performing in other areas.
So, plenty for the investor to learn and understand. Coming up, we'll be discussing whether buy-to-let is a wise investment with three of the industry's leading figures. Here on the Buy-to-Let Show, we've been talking about why some people are successful at buy-to-let while others fail. Let's hear more about this now with my guests. We've got Sherrill George from Chase de Vere, Christina Dimitrov from Direct Line, and Vanessa Warwick from Property Tribes. Hello, everyone. So my first question is to you, Sherrill. You're an independent financial advisor, so you're not a property expert as such. So what are the risks of a buy-to-let investor not speaking to you before they buy a property?
What they're doing by focusing on one area, they're risking a lack of diversification. What we do when we're looking at any investments, we look at the whole financial plan. So it's really important to make sure you take all your financial circumstances, what your goals and aspirations are for the future. By focusing on buy-to-let only, you are actually just focusing on one area.
And I guess what you're also doing is, as an independent financial advisor, your job, you know all of the costs that I've got coming up. Absolutely. That I might not know about.
Absolutely.
So unless they kind of come and talk to you first, I might invest not really understanding what my goals are properly.
Yeah, I mean, the impacts of that is, if you're just focusing on that one area, you've got to think about the risks in terms of taxation. So you're not really looking at the most tax efficient way to invest. And also, you know, from a liquidity perspective, if you put in all your eggs into one basket, you haven't really got liquidity, and all your investment are focused on one area, so you're relying on property prices doing really, really well. And there are so many other things that's available. So we look at the whole financial plan, we look at diversification, which is really key, and we try and make sure that you've got a balance of assets so that you're not focused on one area or relying on one particular asset class to do well.
Yeah, and you mentioned the tax side. What I don't think people quite realise is that by adding a buy-to-let to their existing wealth, you might actually cause yourself some tax problems, which you might not be aware of, and that's key, isn't it?
Absolutely. That's the biggest risk. I mean, there's tax on exit, on a buy-to-let, so when you're looking at your exit strategy, you really got to consider up front the timing that you're going to be in, because when you are ready to exit, you'll be paying tax. Not only will you be paying tax throughout, but it's the exit strategy as well. So there's a lot to consider. And buy-to-let is really expensive to enter into, and it is not the most costly to manage throughout. So there are other types of investments that will give you far more tax efficiency, far better spread, easier to access and cheaper to maintain.
And it's just about, so you're not going to force them into doing something else if they want to do buy-to-let. It's just making sure that they've got a well-balanced investment portfolio.
I mean, we are looking at buy-to-let as one. So our clients will have buy-to-let as part of their part of their portfolio. So we're making sure that they've got balance to all their portfolio by diversifying them. So we look at their buy-to-let alongside everything else.
Okay, so Vanessa, we've been chatting about taxation. Lots of, certainly on your forum, lots of questions.
Yeah.
Is it still possible to make money from buy-to-let, or are we just taxed out?
I think it is still possible to make money from buy-to-let, but the game has changed dramatically, and anybody that enters into it now is going to have to take a much more professional approach. Clearly, there are massive threats to landlords. The biggest, in my opinion, is Section 24, which kicks in from April this year.
And just to explain, that affects the mortgage interest relief that you get.
Yes, you can no longer claim it against your tax. It's going to be phased in over 4 years.
So typically that's if you're a higher rate taxpayer, but some lower rate taxpayers might be pushed into the higher rate.
That's correct, and it mainly affects the more highly leveraged sole trader landlords. So it's not going to affect every landlord, but it is a massive consideration. So moving forwards, if you're going to invest in buy-to-let in 2017, you need to take professional advice, and it may be that you need to go the incorporated route and set up a limited company and invest through that. The other sort of threat to landlords, or the challenge, is the advent of the PRA, which means that landlords are going to have to put in potentially much bigger deposits.
25 is the minimum now, so... But
yeah,
I think most landlords, it's about 50-50 they tend to do.
Well, sort of in the previous years, a lot of landlords have, it's actually been advantageous to really leverage up. Some even, in the 2000s was up to 85% loan to value. It's dropped to 75% in recent years. But now, because of the introduction of new stricter lending criteria, the way that mortgages are given, I suppose it just means that there's a lot more stress tests in terms of how lenders look at buy-to-let loans, and typically it is going to mean perhaps a 35, even 45% deposit, depending on where you are in the country and what kind of rental yields are there. So these are major threats to landlords, and I think that the landlord of the future will be far more professional, probably investing through a limited company structure, and they will need to treat it far more as a business.
Yeah, it's not about going and buying any property, keeping your fingers crossed and hoping it will make you a little bit of money. You've got to do all the legwork beforehand.
Absolutely, more than ever.
And a question to all of you really, to help with that research, is if you're talking to someone who's new to buy-to-let, what is the one tip that you would give them? Christina, what's your tip?
For us, a big one, lack of maintenance. And we think it's got so many negative effects you may not be aware of if you choose to cut corners and ignore certain issues that look small. It may reduce your rental income, it may reduce your capital growth. Your tenants, who may be good tenants, may choose to move out because they know there is value for money elsewhere.
So increase your voids, increase the amount of time it's empty.
That's right, but also emergency fixes may be something that you have to face because, say, you've ignored a leak that your tenant informed you about, and then all of a sudden the pipe bursts and you've got the massive damage. Call-out fees are massive. But the one thing you also have to always be aware of, there's certain things that you have to do in a property that means obliging the law. You need to maintain certain carbon monoxide alarms, smoke alarms. They need to be checked and tested every now and again. That's your legal duty, so you might be breaking the law if you ignore that. The other thing now is, from an insurance perspective, it's important that when you make a claim, your insurer will assess if your duty of maintenance has been fulfilled. So what they do is they look at the damage and they say, well, did actually the landlord and a lack of maintenance and some neglect even cause that incident or even exacerbate that incident? So you've got an all-around duty to take care of what's yours.
Yeah, okay, I think that makes perfect sense.
It could be actually a sort of breach of the terms and condition of your mortgage as well, if you don't maintain your property. And I just don't understand why people don't. It's your greatest asset. you want to make sure that it's maintained properly, that you're achieving the highest rent, the highest occupancy. It's just a false economy to let an investment property fall into disrepair, not to mention, as we've been saying, all the legal aspects of it, and there are very, very hefty fines for landlords that have disrepair issues.
Yeah. And I mean, Vanessa, you could probably rattle off 100 tips for buy-to-let investors with your vast experience, but what's the big one for you, for somebody new to it?
Well, I've been a landlord for 15 years now, and the biggest single tip I say to anybody is become an expert in due diligence. If you do your research at the beginning and fully investigate every aspect of what you're getting involved with, not only the property, but the lettings agent you're potentially going to work with, of
Check
course,
them out. Yeah.
massive due diligence on your tenant. The best way to never experience a bad tenant is never to let one step over the threshold of your property in the first place. Just do intense due diligence on everything, because if you put that effort in at the beginning, it vastly minimises your risk.
Yeah.
And it reduces all that heartache and financial loss that can occur if you make an unwise decision. So really do intense due diligence on anything and everybody that you're going to have any kind of commercial relationship with, and it will save a lot of heartache and financial loss.
Great tips. Thanks very much, everybody. So that's it for now from the Buy-to-Let Show. Many thanks to my guests, and thanks to you for joining me. Don't forget you can see all of our programmes online to find out everything you need to know about buy-to-let. See you next time. Here on the Buy-to-Let Show, we aim to bring you all the information you need to run a successful buy-to-let. You can find more advice and help by following these links. And you can download our special ebook, which goes with the programme.